Hello, my name is Lene Meligard. I'm the Director of Marketing with Volusion. I want to thank you for joining today's webinar, Managing Tax Compliance for E-commerce Sellers. It's brought to you by Volusion and our partner Avalara. First, I want to cover a couple of housekeeping items before we get started. Today's session will be recorded and you'll receive an email tomorrow with a link to the recording and the corresponding slides. We want to keep today's session as interactive as possible. So we'll have a couple of polls throughout the session and we'll have a Q&A at the end of the session. So feel free to type any questions throughout the presentation in the chat or questions section on your screen, and we'll make sure to get those addressed for you. And now I'd like to introduce our presenter, Diana DeBello. Diana is one of Avalara's product solution engineers with over 25 years working in various industries in supporting sales and using tax function. She has expert industry recognition and has developed numerous papers and presentations on the topic, including articles for the Journal of Accountancy and the Journal of Multi-State Taxation. So without further ado, Diana, please take it away.
Thank you so much. I am so happy to be here today with everyone. I am very excited to talk about sales and use tax, and hopefully we can make this an exciting and interactive session. So what I want to do is I do want to share my screen, so bear with me for a second here. I'm going to turn my video off, and you should be able to see my slides. All right, so here we go. Let's talk about our agenda first. We're going to study COVID-19's impact. Unfortunately, it has had an impact on pretty much everybody, especially in business. Sales tax, how it's a moving target, and then some of the concepts we need to discuss when it comes to sales tax compliance for omni-channel sellers. And then finally, some recommendations to optimize your compliance to make it easier for you. And then we're going to go through the Q&A. So we have a lot of content to cover, but I'm going to try and make sure we leave enough time to address your questions. So again, feel free to type them in the chat and we'll review them at the end of the session. All right, here we go. You ready? All right, COVID-19 accelerated e-commerce growth by 4 to 6 years. With the huge increase in the amount of online sales in the past 18 months, it has really jettisoned the growth of COVID-19. So online retailers are reassessing their digital platforms. Online retailers really need to step up the game in order to compete effectively in this new digital marketplace. So choosing the right technology is going to be very important to everybody in this business. And it's a top challenge for 40% of the e-commerce companies. In 2021, U.S. consumers will spend between $850 and $930 billion in e-commerce purchases. So that's a lot of money. I know I contribute to that number. I contribute more than I should to that number in the purchases that I make online, but it is a significant amount of revenue transacted daily on the internet. All right. So what is the impact of e-commerce? There are a lot of states that have implemented what's called an economic nexus standard. So prior to 2018, most states followed a physical presence standard. There were a number of renegade states that had some additional ways to create nexus. So nexus is basically that connection between a jurisdiction and a company that can allow them to require that company to collect their sales tax. There's also an income tax nexus, and it is different from sales and use tax nexus. So it's important to note that sometimes some of our customers, tax advisors, will tell them, hey, you know, you're covered, you're only doing sales activities in the state, you don't need to register for sales and use tax. But that's not necessarily the case. And it is certainly not the case now when 44 states plus DC and some local governments in Alaska tax remote sales via economic nexus. So what are some recent updates? It's been an exciting couple years in the sales and use tax arena. A lot of changes have come about. But Florida enacted their economic nexus in April of this year. And beginning July 1 of this year, any businesses with more than $100,000 in taxable sales in Florida in the previous calendar year must register to collect sales tax. Also, marketplace facilitators are required to collect and remit tax due on third-party sales after July 1. So that's this month. As you can see, things have been hopping in sales tax. In Kansas, for the past couple of years, Kansas provided no small seller exception or marketplace facilitator collection requirement. What does that mean? That meant that as soon as you make an online sale in Kansas, you are required to register and begin collecting the tax. But on May 3rd of this year, Kansas overrode that the governor's veto on a bill that did establish an economic nexus threshold of $100,000. So that's effective July 1, 2021. But for previous years, you may be exposed if you've made sales into Kansas. And then finally, Missouri, there's been a Senate bill that was sent and was anticipated to be signed on May 21st that would impose collection obligations on certain remote sellers and marketplace facilitators starting January of 2023. I haven't heard that the governor did in fact sign that, so the jury is still out to see if that is actually going to take place, but Missouri is the only holdout state of the states that collect sales and use tax. So I would imagine that they are going to definitely implement something. So as we look at this map, in June of 2018, the map on your left is the map that shows the states with economic nexus laws. And even then, a number of those economic nexus laws were recently developed or implemented. And they did that, the states that did that in anticipation of a court case coming down, such as South Dakota versus Wayfair. South Dakota versus Wayfair was a U.S. Supreme Court case that was heard in 2018, where the U.S. Supreme Court agreed with South Dakota and said it's okay to require an out-of-state seller to collect your sales tax if all they have is an economic presence in your state. This definitely changed the playing field for sales and use taxes, and it's been anticipated by the states for many, many years. The states really wanted to be able to recoup the revenue that they perceived to have been losing on those online sales. So a lot of them did implement these economic nexus laws prior to the court case being heard by SCOTUS. If you look at the map on the right, that was April 20th of this year. So you can see a lot more blue on that map. And as I said, Missouri is the only holdout to date of the states that collect a sales tax. Now, here's a fun fact you can use to entertain people when you are at a cocktail party. There are 5 states that do not collect a state sales tax. That's New Hampshire, Oregon, Montana, Alaska, and Delaware, otherwise known as the nomad states. So you can always remember which states they are. Now, there's a little asterisk here on Alaska because while Alaska doesn't have a state sales tax, there are a number of local jurisdictions within Alaska that do impose a sales tax. So that's your fun, entertaining fact that you can take home with you and use it at your next party or family gathering. All righty. So here we are at poll 1. So do we have the question for the poll?
Okay, so the poll should be up. And we're starting to get some
No.
responses on that.
Okay. Yes. I don't see it. I have to remember that.
No problem. We're getting a lot of good responses in, so we'll wait just a little bit longer as we start collecting more.
So the question is, in approximately how many states does your company do $100,000 plus in gross sales or 200 plus transactions annually? Is it 0 to 1, 2 to 5, 6 to 10, 11 to 25, 26 to 50, or unsure?
Okay, and I'm going to go ahead and close the poll. It looks like we have almost everyone responding now.
Awesome.
And here's our results. So it looks like 51% is 0 to 1, 16% 2 to 5, 10% has 6 to 10, 11% 11 to 50, and then not sure is 13%.
Wow. So it's all over the board there. So it is important to understand where you may have some economic nexus, because that can certainly impact your business. So one of the things I'm showing you here is another map, or basically it's the same map that I just showed you of the states that have economic nexus thresholds. But added to this is some of those thresholds. And if you scan down that list of states, you'll notice something significant, that none of them match. So it is difficult to manage this aspect of your business, understanding where you may have exposure in states, because economic nexus thresholds vary from state to state. Now, I do want to point out that at the top of the screen, you can click on the link for the sales tax risk assessment when you get your copy of the slides, and you'll be able to go to our website and complete some questions and determine where you may have some risk for exposure. Now, North Dakota is $100,000 in taxable gross sales, whereas Kansas is $100,000 in sales. So there is even a difference in what the basis is, not only in the volume threshold of dollar amount, but in the type of sales. California and Texas are $500,000 in sales, and exempt sales are included. So think about sales for resale, sales to the federal government, sales that are typically exempt from the tax. And then in Connecticut, it's $250,000 in sales and 200 plus retail sales. Whereas in Georgia, it's $100,000 in sales or 200 retail sales. So that means that in Connecticut, if you have large dollar item sales, then you might not hit that threshold until you get past that 200 transaction count. Whereas in Georgia, if you have small dollar items and you are processing, 200 retail sales a day or 200 retail sales, you are easily exceeding that threshold, even if you haven't sold any large dollar item amount, any large amount items. And then in Alabama, of course, it's 250,000 in sales. They can't even round it to the nearest 100,000. Got to be different. And exempt sales are included. So it's interesting to look at all of the different thresholds and understand what type of impact that can have. I briefly touched on marketplaces previously. So a marketplace seller is like Amazon, Etsy, Walmart. Those marketplaces where you will distribute your goods using those sales channels. More than 44 states have marketplace facilitator laws, and Kansas and Florida recently enacted laws, and Missouri we're still waiting to hear on. So what does that mean? the marketplace sales open sellers up to Nexus triggering activities. So if you are using a marketplace for your sales and your fulfillment, storing inventory in a warehouse in a state could create a Nexus generating activity for you. And then also the economic activity in that state can also expose you to Nexus in that state. So the states are refining their marketplace laws. A lot of times they want to include food delivery and lodging marketplaces as well. So it's an important area to keep an eye on. And it is a challenge for companies to manage because they get their reports. Is their marketplace collecting the tax for them? The marketplace facilitator laws are requiring these marketplaces to collect the tax on behalf of their sellers, so that you don't have to collect and remit that tax. But reporting it on your returns when you're using marketplaces can be a challenge in some states. And also understanding, is the marketplace in compliance with those laws? And are they actually calculating the correct tax? And are they remitting it for those sales transactions? So if you are utilizing marketplaces, it's really important to understand the components of that contract and how they are participating in supporting the sales tax collection. All right, so wouldn't it be nice if we just didn't have to worry about the cost of calculating taxes and filing returns? And, sales tax, if it's done correctly, is a pass-through tax. So you are charging the tax to your customer, and you are not paying that tax. However, if you don't charge the correct tax to your customer under audit, you can be liable for not only a penalty and interest, but for that tax amount that you could have passed on to your customer. So it's important to get it right. One of the ways that state and local governments have come together to assist businesses is to institute the Streamlined Sales Tax initiative. Now, this program allows qualified businesses to get their tax calculations free and their filing free in the 24 member states when they're using a CSP. So Avalara is a certified service provider, so the states do compensate us to provide our customers who qualify free services for their calculations, filings, and the returns. So businesses must qualify as a volunteer seller if they have no place of business for more than 30 days in the state, less than $50,000 of property and payroll in the state, and less than 25% of property or payroll in the state. So to learn more about the qualifications for the Streamlined Sales Tax, you can click on this link from your slide, and you'll be able to get to the SST website. All right, so here is the heart of the matter. What omni-channel sellers must know about sales tax? And the biggest challenge is there's so many ways to sell. There's different sales channels you need to worry about. But the first thing here is tax rates, identifying tax rates. In 2019, there were 34,000 plus rate and taxability updates in the US and Canada. And there were 115,000 sales tax holiday rule updates. It is almost an impossible task to keep up with all of these changes. So the challenge is if you're using tax tables, it's difficult to keep up with all of the different rules and the rates. Also, rate tables don't offer product taxability rules typically, and those will often vary by SKU or location, etc. And then calculating sales tax by a zip code is not going to give you an accurate result. Greenwood Village, Colorado has one zip code but 4 different sales tax rates. And in fact, there's one location in Colorado that we use as an example where the difference between the rate between neighboring buildings is almost 5% difference in the tax rate. So if it were me, I'd be having all of my sales, all my Amazon purchases shipped to my neighbor's house so I could get the lower rate. But I didn't say that. I wouldn't do that. To be sure that you're charging the right rates, you need rooftop level accuracy based on a geographic location. The address is not going to a zip code or a city and state is not going to necessarily get you to that correct tax rate. So it's important to get to that rooftop location. All right. I love the wacky tax facts in sales and use tax. I just have to scratch my head and wonder what's the thinking behind that. And one of my favorite things in life is donuts. I love eating donuts. So in Texas, 5 or less donuts are taxable and 6 or more are exempt. So the thinking behind that is that if it's 5 or less, it's for immediate consumption. And then if it's 6 or more, it's for home consumption. So groceries are typically exempt in a number of states. So it falls, when it's 6 or more, it falls into that type of category. I personally love the idea that 5 or less donuts are a food for immediate consumption, and I would be happy to eat them all now. In Indiana, a Snickers bar is taxable while Kit Kat and Twix are not. And the thought process behind that in Indiana and a number of other states as well is that if a food has flour in it, it's food, not candy. So it's using the ingredient of flour to determine what the tax treatment is for that product. There's a whole bunch of fun tax facts like that you can certainly surf the internet and find some to entertain your friends and family. All right, product taxability. There are so many challenges with product taxability. And of course, the states are not consistent from one state to the other. So some of the common challenges that companies or omni-channel sellers will come across is taxability for shipping and handling. It varies from state to state, and depending on what it is, whether it's just a shipping charge, if it's a marked up shipping charge, if it's a handling charge or a restocking fee, the taxability is going to vary. And then there's drop shipments. Drop shipments has been a challenge in the sales and use tax world for a long time. And the scenario for drop shipments is if a manufacturer sells to their distributor and that distributor sells to the customer, the end consumer, and the manufacturer has Nexus in the state where the end consumer is, the distributor directs the manufacturer to ship it directly to their customer, but the distributor does not have Nexus in that state. How can the distributor document that it is truly a sale for resale? So that has been a challenge for companies for a long time when dealing with the sales and use tax challenge. And what states allow varies greatly. Some states will allow the distributor's home state certificate for resale, while as others do not. And in fact, I think California has a markup percentage that you're supposed to use to calculate the taxable base and charge tax on that sale to your customer or the distributor. So it's very complicated, very challenging scenario. Exempt sales. So not only are products taxable or not, there's also sales that are exempt by the nature of how they're being used, whether it be used in agriculture, used in manufacturing, and of course, all of those rules vary by state. And then adding new products. Learning how to treat the taxability of new products that you're adding and labeling that on a state-by-state basis can be a challenge for a lot of companies. And if you're charging the incorrect tax rate for your products, you could be under or overcharging your customers. That really causes a bad customer experience and can expose you under audit. And in fact, if it's a big enough company, can expose the company to a class action lawsuit by the consumers. So it's important to really understand what tax rate you should be charging and what tax treatment you should have for your products and services. The third item here is selling across state and international lines. So as we talked about, thanks to Wayfair, your business is more likely to have triggered an economic nexus in multiple states. We looked at some of those thresholds. Here's two more for you. It's $500,000 in annual sales and 100 transactions in New York, and that includes exempt sales, but not exempt services. So that's a pretty narrow description there. And then in Pennsylvania, it's $100,000 in annual sales only, including exempt sales and services. So yet again, this displays just how different the states are in the way that they interpret their economic nexus. Managing business to business sales. This is a challenge and has really evolved a lot in the past year. A lot of the companies that we speak with have moved from doing traditional sales for B2B to moving online for their B2B sales. In addition to that, typical B2B companies are now selling in a B2C type of sale channel. So there's a lot of changes that have been going on in the past 18 months, but the common challenges of exempt sales or resales is the need for the customer to contact the seller to provide the necessary paperwork before the sale is allowed. So this can lead to cart abandonment. So if your customer can't get their exempt sale processed, then they're going to abandon their cart if you have a B2B e-commerce solution. Where the customer chooses not taxable and the sales is allowed with the intent to obtain the certificate in the future, this leaves your business at risk. Because if your customer never gets you that certificate and you exempt the sale, then you're going to be liable for that tax. And then where the exempt customer pays sales tax and it requires you to refund the customer or rebill them, that's also a challenge. I used to work for a company and we hated processing tax-only credits because we would bill our customers and they would then choose to send us their exemption certificate. So rather than create a new invoice for them, we would then just give them a tax credit and we'd have to do that before we turn them to exempt. And it's a headache and it's a nightmare. So to effectively allow exempt sales through your e-commerce platform, you need to be able to identify those sales and those customers and then be able to collect those certificates from the buyer, either through your e-commerce platform right at that shopping cart, or if you're doing more traditional sales methods, being able to collect that information right there from that customer. Selling through multiple channels. So we've talked a lot today about lots of channels, sales channels. So there's selling through the marketplaces. We talked about the marketplace facilitator laws and how it can create an economic nexus or can create a nexus activity for you. A couple years ago, there was a court case in California where the seller was utilizing marketplace to facilitate their sales, to fulfill their sales. They had their inventory stored in a warehouse in California. They didn't know that the inventory was being stored by this fulfillment company in a warehouse in California, but California found out, and they went to this company and required them to do the back filing for the sales taxes. So it was a very costly issue for that company. Next is product returns. So being able to accurately and efficiently process product returns is critical for e-commerce. You need to be able to refund your customers in a seamless and easy fashion, and being able to refund them that correct tax rate that was charged originally, and then make sure that you are able to amend your sales tax returns to correctly reflect the product returns. So I had a client once when I was consulting who they sold very large pieces of equipment or costly pieces of equipment. And on occasion, they would ship 2 or 3 of these large pieces of equipment, and the customer would return it. And I was doing some historical analysis. And what I found out is whenever a customer returned equipment, they would credit the customer everything that the customer paid, including the sales tax. But they never went back and did the correct accounting to reflect it in the sales tax returns, and they never filed an amended return. They did this for 10 years and exceeded the statute of limitations, and they ended up losing hundreds of thousands of dollars in tax that was never credited on the return. So it was a painful conversation to have with that controller. But it's important to understand that you can't just give your customer back the money and not account for it in your sales tax returns. And this was a large company, and you would think that they would have the resources that would understand that. But sales tax can be a daunting task and something difficult to deal with. So it's really important to understand your processes and where the money goes and how to make sure that everything ties out. And one of the ways to do that is to optimize all of your sales tax function so that you are sure that it ties into your ERP, your general ledger, to just get that information documented, being able to report on it, making sure everything is accurate. So I'm going to give you some great suggestions for a cohesive sales tax solution. Of course, Avalara provides all of these aspects of automation. So we are happy to assist you in any way to make your sales tax burden a little less. It's critical to have something that integrates with your e-commerce platform, especially with all of the business being transacted in an e-commerce way. You need something that's going to give you those tax calculations, and then when you move those e-commerce transactions into your ERP, also integrate with that ERP. And your POS, if you have point of sale solutions, it's important to have ways to calculate that tax, capture that information, and make sure that everything is reconciling. Having a cloud-based tax automation software ensures that you don't have to worry about the updates. All of the rates and rules are updated automatically, so it will instantly calculate that right tax. Being able to scale for not only company growth, acquisition, also adding new product lines. being able to handle new product taxability as you change your markets, being able to expand into new geographic areas, monitoring and tracking those Nexus thresholds that we talked about that are so different from state to state, and consolidating the sales from your different channels that you sell to a single location, so you have that source of cohesive data. And then managing B2B sales. So you need a platform that can collect and validate and manage exemption certificates, whether it be resale certificates or exempt org certificates or any of the exemptions that exist. Just being able to make that customer experience a little easier. I had a client once, and they are a well-known sporting goods manufacturer, and they would, on their e-commerce site, if you were an organization that was ordering goods from them and you had an exemption, you had to exit the e-commerce site and call in directly to a person in order to be able to facilitate that exempt sale. Being able to facilitate that exempt sale right in the e-commerce shopping cart can really make things much better and minimize your cart abandonment numbers. All right, we're ready for poll number 2. How much urgency do you feel to implement an automated sales and use tax compliance solution? Answer number 1 is, I feel the pain, I need it now. Answer number 2 is, it's on my to-do list, but I have other priorities that are more pressing. Answer number 3 is, it isn't even on my radar screen. And answer number 4 is, I am already a tax automation pro. So hopefully you are answering those questions in the poll.
We're getting a good amount of responses. I'm just letting it go for a little bit longer. It looks like there's still a few coming in.
Yep. I bet everyone's going to answer, I'm a tax automation pro.
We do have some.
Oh, I'm sure. I'm sure. Anyone who deals in this type of business, you quickly become a tax automation pro when you have to deal with cranky customers and making sure that you don't inhibit any of your sales channels. And
Okay, I'm going to go ahead and close the poll and we'll share the results here. So 20% says I feel the pain, I need it now. 50% says it's on my to-do list, but I have higher priorities. 22% it isn't even on my radar, and 7% I'm already a tax automation pro.
great. Those are good responses. Thank you. All right. So just an overview of the Avitax solution. We have an end-to-end sales tax compliance solution that's going to help ease your burden. Avitax is a calculation engine. We'll get transaction information from Volusion, and then we'll return the tax information back to the system. It allows real-time call out to get that tax calculated. All of those tax rates, boundaries, and rules, the tens of thousands of changes I talked about, that's all automatically researched and updated in that engine. In addition to that, we have Cert Capture, which helps you to manage your exemption certificates for your B2B sales and if you are dealing with exempt orgs. And finally, the returns managed filing. Doing compliance is a challenge. So filing those returns, every state is different. You have to log on to the website. Some states or some jurisdictions still require paper filing. So you can outsource that solution to us. We have the ability to file on your behalf and take care of all the remittance. so that it is one less thing on your to-do list. I always joke that I do this job because I hate filing sales tax returns, but they can be fun sometimes. I mentioned that we call out to Avitax. Volusion will call out to Avitax to get a tax calculation. This is the sub-second challenge. It'll take me a little bit more than that to go through it, but when a customer hits purchase on a website, Avitax will validate and/or correct that address. It'll apply the sourcing rules. In some states, it's going to be origin-based. Some states, it's destination. And in some states, it's a hybrid of the two. So that means where you pick the rate. Is it at the destination, the ship-to location, or is that the origin? Then it will assign the applicable jurisdiction and the rates. It'll apply the tax rules and regulations. It'll check to see if there's an exempt customer status. It will identify the product taxability. So is it taxable or exempt? It will check to see if there is any applicable tax holiday. A number of states do have tax holidays. Predominantly, they are back to school holidays, but I've seen some additional ones being added. So there may be some out there that apply to your business. And then sends the correct sales tax back to the checkout. So all that in less than a second, and stores all of the information from that transaction for future remittance and reporting. So here's some statistics from 2019. We have updated information that we need to add to this, but basically, year over year, the increase in tax engine calls has been 107%. 137 million tax engine calls on Cyber Monday. It was greater this past year. And then 498 million tax engine calls during Cyber Week. So that was 2019. 2020 was much larger and had much greater impact. So it's important to understand that there's a lot going through that tax engine, and getting that calculation back in that sub-second is of utmost priority for us. It's proven security, performance, reliability, and availability. So basically, we build the capacity to deliver 4 times the number of API calls per second than we handle on average, so that we can go up or down on our volume as needed. More than just B2C, we talked about the B2B Exemption Certificate Challenge. If you are selling to an entity such as government agency, you need to get that exemption certificate. Sometimes customers have an exemption for a specific instance or purchase. So if they are not using it, if they are not using an exempt way, they may need to pay tax on those items. But they may have an exemption certificate for certain goods that they purchase that are going to be used in an exempt manner, whether it be a sale for resale, whether it be a manufacturing, raw materials, that type of thing. And then finally, the item being sold is intended for resale where the tax will be collected. And in B2B, that's predominantly what you're coming across. But it is critical that you get that documentation, and missing expired or invalid certificates cost more in taxes. And that's one of the highest areas where assessments come from in audits. So in the past, we've estimated that 80% of audit assessments come from missing expired or invalid certificates and consumer use tax. So it's really important to make sure that you shore up this, because again, sales tax is a pass-through tax. But under audit, if you haven't collected that tax, you're going to be liable for that tax. So it's a direct hit to the bottom line. To collect embedded exemption certificates, you can embed the code right into the shopping cart. So I talked about that quite a bit. So when your customer comes to that shopping cart, they can just click on this, is this purchase tax exempt link, and it will allow them to launch Cert Express right at that point of purchase, and they can collect and store the certificates in Cert Capture. It makes it an easy real-time transaction to get correct tax calculation, an exempt sale, and it makes your customer experience so much better. They don't abandon that cart because they have to call someone to deal with it. And then if you're doing business internationally, e-commerce has one of the fastest growing areas is cross-border sales. So the growth rate is 2 times that. It's a 2-time growth rate, and it's expected to significantly outpace that of e-commerce. So 5 out of 10 e-commerce retailers are investigating an automated solution to calculate customs duties or import taxes. So that's a critical area. If you are making sales internationally, the thresholds for those requirements to calculate customs duties and imports are very low. So it's important to understand what you need to do in order to meet those requirements. In cross-border selling, we have all 4 pieces of the cross-border tax puzzle. We have HS code classification, we have import tax calculation, we have duty tax calculation, and for the US, we have US sales and use tax calculation. So no matter where you're selling, we can support you with those calculations. And that brings us to our questions and answers. So hopefully you all enjoyed this session and you have some questions.
Great, thanks, Diana. We do have a couple questions here, so we'll see how many we can get to. The first one, if I sell out of state on my website, can I charge tax? What determines that, and what would be the percentage? Is it based on the state I'm shipping to?
So what was the first part of that sentence?
If I sell out of state on my website, can I charge tax?
I fill out of state on my website, can I charge the tax? So if you have a customer on your website who is out of state, if you have Nexus, you're required to collect the tax. If you are purchasing and you are out of state, if you do not have Nexus, then you're required to accrue a consumer use tax. And I hope that answered that question. If not, certainly reach out to us with more specifics and we can assist you. What's
Great.
next?
Okay, the next question is, most of my items are drop shipped from other states and a few from another country. How do I do this?
So if most of your items are drop shipped from other states, I need to know which role you're playing. If you are the drop shipper, if you are having them drop shipped to your customer, or if you're the customer and it's being drop shipped to you. So if you are drop shipping to your customer and you do not have Nexus in that state, then on your bill to the customer, you're typically not going to charge that tax unless you're registered in that state. The manufacturer or your vendor who is drop shipping to your customer, they may have Nexus in that destination state. And if they do, they may be required to charge you the tax on their sale to you because they are shipping to your customer, but it is going to be on the invoice to you. So that's the challenge, where knowing what type of documentation you can provide in that scenario, and if you can even provide a documentation option to avoid being charged that tax.
Great. Okay, the next question is, when calculating your Nexus tax calculation, do you include your marketplace sales?
That's a great question. And it can be included in the sales for your Nexus calculation, your economic Nexus calculation. So it's really important to go and find out what those different thresholds are. Use the link for the Nexus assessment. And yes, in fact, your marketplace facilitator transactions can, in fact, create that Nexus for you.
Okay, great. What happens if you have Nexus and you didn't know that the states collect on back sales and just the ones moving forward?
So you have Nexus. It's important to go and look at your exposure. So when you determine that you have Nexus, it's important to go back and see what transactions you had in that state for prior periods. A thorough Nexus study can assist in that, an exposure analysis, to go back and identify which transactions you should have collected tax on previously. Then what happens, the best practice is to do what's called a voluntary disclosure agreement with the jurisdiction. This will allow you to come clean with that jurisdiction in a way that minimizes your penalties and interest and your look back period for audits. But you'll still have to pay some back taxes in those scenarios to make sure that you cover those periods where you should have been collecting that tax.
Okay. Next, in using national distributors or large manufacturers that are already using a Nexus system and are passing the tax through on billing invoices, where's our liability?
So when you are using companies that do pass through the tax, it's important to make sure that that tax is correct. So if you are getting invoices from your vendors, it's important to verify the tax on those vendor invoices to make sure that is the correct rate. If you were doing central purchasing, that type of thing, it's important to understand where those goods are going to be used or shipped to. And if it is, the liability is in some states on the consumer and in some states on the seller. So depending on the state and the state tax laws will determine who has that actual liability in the end. So it is important to understand the nature of the sales tax in that jurisdiction.
Okay. How do we go about registering for different sales tax in different states?
This can be a challenge. Fortunately, Avalara does have a solution to assist you with registration. It's a flat fee per state, and you can certainly reach out to us. We can assist you with registering in as many jurisdictions as you need. We even have the ability to provide you with assistance in doing a nexus analysis or a risk assessment to identify which jurisdictions you do need to register in.
Great. Some customers from our state order through our dealers in other states to avoid paying sales tax. Who has the tax burden in this situation?
Interesting. So who owns that customer? So if they order through a dealer in another state, if you are invoicing that customer and that customer is taking shipment from you, then that is going to be a tax that you would be liable for, facilitating, collecting. If they're located in the state, then they should be charged the tax of where it's being shipped to. So that's the important thing to identify. Typically, it's going to be taxed at where it's going to be shipped to. So the scenario is a little confusing to me, but just know that if you have a transaction, the sale is going to be based on the destination state. And then in the destination state, if it's an origin-based state, it might be at the ship from or it might be at the order acceptance. So understanding the sourcing and the situs rules for that state is important. But if it's a dealer and they are reselling what they purchased from you, then it's the dealer's responsibility. But if the dealer is just acting as a sales agent for you, then it's going to be your responsibility to charge that customer the tax. So I hope that addressed it.
Great. Okay, so this is a scenario kind of going back to one of the polls. So what if you are under $100,000 or less than 200 items invoiced in general, but in a certain month you go over $100,000? How do you know how to charge taxes?
So with each of those economic thresholds, and they vary by state, there is going to be a specific look back period that the state is going to base it on. A number of them do it in the prior calendar year. Some do it in the past 3 years. If you've hit that threshold, then you start collecting. So it's important to understand what that look back is and how long the time you have is to start collecting it once you do hit that threshold.
Okay. Does Avalara handle the collection and filing of VAT and duty for shipments from the US to the EU?
Yes, we can. We do have we do have VAT filing, returns filing for VAT. So yeah, we can support that.
Okay. Do you always look at the past year sales to determine whether you have Nexus in the state the following year? For example, for a state with a $100,000 threshold, if year one I did 50,000 in sales and year two I did 150,000 in sales, would I only have Nexus for year three?
So again, you need to look at each of the state's requirements for the look back period to determine if you are required. But once you have Nexus, typically you're going to continue to have Nexus. So it's not like you do it for a year and turn it off. Once the states get you, they're not going to let you go. So they want you to start collecting the tax. And then even if you have no transactions in that state, you do have to file 0 returns for a period of time until they feel comfortable that you are not processing sales in their state.
Okay, great. Lots of good information. We still have a bunch of questions. It sounds like, it looks like some of them are duplicates, so hopefully we answered the majority of them. There are some Volusion specific ones as well, so I will be sure to capture those and have our team follow up with those individuals separately, and we'll get those answers for you directly. But I really appreciate everyone's time, and thank you to Diana and to our great partners at Avalara. And here on this last slide, we have some contact information if you wanted to schedule a meeting with the Avalara team to find out any additional information. So thank you very much, Diana, and everyone for attending.
Great. Thank you.